Let's talk to Richard Hunter. He is from Interactive Investor. Richard, welcome to the show.
Hi, Nick.
Here we are, we're going into reporting season. The market obviously needs some sort of pickup on the back of the volatility, the geopolitical tensions and the likes. Are we going to get a good set of numbers this time around?
Well, the early signs are quite encouraging, as would traditionally be the case. It's been kicked off in the States with the banks.
Yep.
They're generally speaking been fairly good. Goldman Sachs has been probably the standout performer so far. And that is a very encouraging sign. Not only are, as you say, a lot of hopes pinned on this particular reporting season for the quarter, mainly so that companies can continue to justify these lofty valuations.
Yep.
But of course, it's also something to distract the market. Again, as you mentioned, quite apart from any geopolitical concerns, there are any number of concerns out there at the moment. Whatever the president might tweet next,
Yep.
the thoughts of a trade war with China and so on. But certainly in terms of the initial signs, they're looking fairly encouraging.
Understood. In terms of the Footsie 100, last year, 2017, was almost, Footsie was about being a currency play, the Great British Pound against the US dollar. Is that still the case? Okay, we've seen great strength in the Great British Pound this year, a one-way trend, if you like. I think we're now above the Brexit levels, okay? Is this suddenly going to have a knock-on effect to Footsie? Obviously, it had a weaker start this week.
2018 has been quite strange so far, and the Footsie 100 has had the worst of both worlds because, of course, for a lot of the first quarter, we were seeing the market moving backwards and retrenching on concerns that inflation was going to be rising, particularly in the States faster than expected,
Yep.
which could lead to interest rates being tightened more aggressively. So that was pretty much the story of the first quarter. Unfortunately, the very recent strength in sterling has gone back to being the main driver for the Footsie 100. And even though around 70% of corporate earnings in the Footsie 100 are coming from overseas, and therefore it isn't a barometer of the UK economy, it does nonetheless show just how fragile sentiment is and how it can change on a sixpence. But having said all of that, we are continuing to see some pretty robust economic figures coming out of the UK, which in turn means that there's probably an 85–90% likelihood of a hike from the Bank of England Monetary Policy Committee in May, and obviously that's very supportive to sterling as well, if not the underlying Footsie 100 companies.
Right. In terms of sentiment and market position, beginning of the year we saw record inflows coming into the markets. Do you think that there is a bull and a bear case out there now? Because everyone was so bullish in 2017, everyone was so bullish into the beginning of 2018. Do you think the bears have almost, they're taking centre stage at this point in time?
I think the main thing that's changed in 2018 is we've seen the return of volatility. Last year was like a duck pond. Whatever came along, nothing would move markets. The trajectory was pretty much upwards, and that's all we had. Luckily, we had some air coming out of the tyres back in sort of January, February time, which has made
Yep.
things more volatile, but probably more realistic. But by the same token, bull markets don't die of old age. They die when something fundamental changes. And there is absolutely no reason to think that economic figures coming out of the States, for example, continue to be very strong. GDP is being revised upward, and
Yep.
in fact, if companies do live up to expectations for the Q1 earnings season, you could find that the US markets have still got some way to go upwards from here.
Right. Finally, got to ask you, because it's me, in terms of sectors, is there any sectors you particularly favour for sort of the rest of the year?
In terms of the US, and especially in terms of what we're currently seeing, you're going to be looking towards the technology firms and the financials. And I suspect if we're even starting to get a sniff of any sort of rising interest rates in the UK, financials may well be worth a look here as well.
Richard, thank you very much indeed for your time.